Hey everyone, it's Nick with Us versus Herd here. Thanks so much for joining us. If this is your first time here, please hit that subscribe button. If this video was of value to you, hit that like button. I'm going to go over real quick the options trading group. If you're not yet a member of our options trading group, the link is below. It's a free group. There's a lot of value here, a lot of content being posted, a lot of people sharing, and just a bunch of good vibes, a lot of good people in here. So definitely hit the like button below. We're growing quickly. We're small. We have 120 members, but we got 43 new members this week. If you've already joined, thank you so much. Glad to see you in there. Glad to see you all contributing. But what I want to get to today is losing money in the market and why it's okay to lose money in the market. And people get discouraged when they're losing money in the market because, hey, you put a position on, whether you bought stock or you bought options, you're going to lose money in the market. Today was actually a really good example of losing money in the market. A lot of crazy things were happening this week. Things are ripping up, things are ripping down. A lot of things in the news, and when you put a position on, especially options or even stock, like I think there's some statistic, but 90% of the time it goes against you initially, especially especially when you put it on, because it could go up, it could go down, depending on what you want to do. I'm actually going to be using Robinhood for this demonstration because it tracks all my data for the 1 year. No other brokerage really does that, like Thinkorswim or Tastyworks. So I'm going to be using this. My Robinhood account, I don't really actively trade on. I actually am kind of heavy right now on options on this, but I don't really actively trade on here. My main brokers are Thinkorswim, TD Ameritrade, Thinkorswim, and Tastyworks. But since this tracks my year-to-date performance and all that, I do trade on here from time to time. If you guys have any questions, if those that are joining right now, leave them below. I'll be sure to do my best to answer everyone's questions as well. But what I want to talk about here is, as you can see today, we had huge rips. This is my portfolio today. We went up a lot today. We went down a lot today. And if we switch over here, this is Thinkorswim. This is Apple down here. Let's zoom in here. Just on today, we went from 214 to 217 all the way back down to 215. And most likely, if you put a position on today, you were losing money. I mean, I did pretty good today on my Tastyworks account. I actually posted that in the group here. Where is it? I made 229 in 15 minutes here, and you can see that I caught the drop here. So that's another benefit to joining the group. So we caught the drop here on Alibaba. Bought it for 221, sold for 450. So I did a strangle on it in just 15 minutes, over 100% return. But as you can see, as violent as these charts are here, things could easily go against you, and that's what I want to show you today is, a lot of people think like, hey, I don't want to lose any money in the market. I don't want to do that. But even like the most experienced trader will tell you, like, there's no way to really avoid losing money in the market. You're going to lose money in the market. It just depends on how you manage your risk. And also, it also depends on your entry and exit strategy. Like people that just put trades on, just say, hey, I'm just going to buy a cheap call or just a cheap put, knowing that there's the probability of it expiring worthless is great, but they don't realize it and they're just gambling. Like, you hear stories of, hey, I bought this contract for 1 cent and it turned into $3 and I bought 10 of them and, made $3,000 off of like, a $10 investment, made like 5,000%. And those things happen. But to be a profitable trader, that doesn't happen very often. The one thing I will say about my Robinhood portfolio is that it's a bit skewed today, just because of all the stocks I held. I never sell these stocks. These stocks are always in here, so it's a bit skewed, but it's a good example of things that have been going on here. Want to go to the 1 month chart. So the 1 month chart, we're down some cash, and this is due to on July 25th, I had like 4,800 in here, and mostly due to the decline in the Facebook and Twitter and Snap. So all the social media stocks, they got sold off, if you remember correctly, back in here. If you're just joining us now, I said earlier, if you have any questions, I'll be sure to answer them throughout the stream if you guys have any questions about stuff. So as you can see here, things like this really hurt me. My average cost on these shares are $88, so not a big deal. But as a trader, things go against you from time to time. Not everything's going to be green. Not everything's going to be red either. You know, and a lot of people, what they'll do is when they see a decline like this, you know, this portfolio was up 3% for the month, and we actually hit negative 13, almost 14, 15% in just 3 days because of all the stock declines. I mean, Facebook went down, and then they continued the trend down. Twitter, I have a pretty, you know, I own 30 shares of Twitter. However, my average cost is $19. So $33, you know, I'm still up a lot, but you know, Twitter went down for days straight, and this chart kind of reflects this. So people will do like, I just want to take my money out of here. I need to take the profits. And what you're doing is you're most likely, you know, knee-jerk reaction. And really, when things move fast, it's best for you to really just like slow it down, slow things down. When things are moving too fast and you're not comfortable, just don't make any knee-jerk reactions. Just sit on it. You know, just don't do anything. I mean, that's what's worked out best for me. You know, you could be different depending on your personality, but I noticed that when I do like knee-jerk reactions, it costs me money. And I don't want to lose money in the market. So as you can see here, the way that I've been fighting back, you know, we went from negative almost 15% here. You know, now we're down 7% in the month. You know, I've made basically half back, and this is kind of reflective against some other positions on my other portfolio. But if you're just joining the stream, I said this. I'm using Robinhood because this is the only brokerage that displays the chart this way. Anyways, but if you look at the 3-month, you know, the 3-month here, you know, we're up 10%, and we had this sharp drop, but hey, we're still up 10% for the quarter. You know, things are looking good. And then if you look here, over the yearly, we're up 40%, you know, a little bit, almost 41% here on this account. And as you can see throughout the year, things have been going good, but as you can see, there's periods that things have not been going good. You know, the first drop there was in February, and if you look at this chart, the chart looked a lot more, a lot worse back in February. But I went from, you know, up 19% down to 12, and at the time it was like a 10% drop in my portfolio. I think I was up 10%, and then it went down to like 3% or something like that. And now you can see it's like a very small blip. Now, if I did like a knee-jerk reaction, sold all my stocks, sold all my options, did everything like that, I would have missed on this huge rip up from February 6th all the way up to March 16th. So not only did you know, waiting help out, but I also exceeded where I was prior to that. So that's really what I wanted to show here. Now, a lot of these gains, especially down in here on this second drop, I've been trading more options on it, and that's how we kind of got up to here. And then we had, on this drop here, I've been trading more options when we got to after July 25th. I've been trading more options. That's how I've been getting a steady increase here. In February, there wasn't really a whole lot, you know, I mean, in Facebook, I'm talking about is Facebook hasn't really gone anywhere. Twitter really hasn't gone anywhere, but how I've been increasing is just been trading options on it. And, you know, most times, like look at this strangle here. I put a strangle on Apple today, and it went against me a little bit. I mean, the one thing that I want you to take away from this, especially when trading options, you're never going to time it 100% correctly. I mean, yes, you may, but you're always going to be down $10, $20, maybe even $50, or, you know, depending on how large you're trading. And I put this trade on when it was 107. So it was earlier in the day. I was up in here, up in this range here. It was like 11 or so Eastern time, and then just when, you know, the strangle, I put a strangle on here, just declined. But if you look at, you know, you have to understand your entry and exit goal, and don't always pay attention to the option pricing. Option pricing is important, don't get me wrong, but, you know, the IV and everything like that comes and goes. What you really want to concentrate on, or at least I concentrate on, the stock price. You know, so I put the strangle on, and, you know, I have the 215, does it show here? Yeah, I got the 215 put and the 217.50 call. So the 215 put, you know, you always got to manage your risk depending on how the day is going, and this is for tomorrow. But the way the day is going, I feel comfortable holding this because, you know, it actually at close went to 215.16. If tomorrow we have a nice gap down day, you know, this trade is going to be looking good. Now, it's gone against me, don't get me wrong, but it's going to, based on the chart here, it looks like to me it most likely is going to work out. You know, we've gone, the S&P went from super green to negative, and then was fighting being green all day, and then it closed negative. And depending on how the day goes, depending on how you manage risk. So always have an entry, always have an exit strategy, and always throughout the day, especially when you're day trading or swing trading, like this would be a swing trade, you definitely want to manage your risk appropriately. You don't want to just gamble, have a stop loss. For this, I was willing to, I spent 100, cost me 100. I was willing to close it out for a $50 loser if it started to go against me. And that's why I set it up for me. Now for the closing the trade out, if it's profitable, I was actually looking down in the 214 range here. And if you look at the weekly, it was down in 210, went all the way up to 219. So either way, I was looking at a sweet spot, and the current markets are swinging up and down pretty huge. So that's why I chose a strangle. So right now it's against me, but a lot of times when I swing trade like this type of strategy will work out, as long as you know what your end goal is. Also, there's been many times that, so let's say I bought Twitter options, and I was down 100% out of them, but I had a long time till expiration. A lot of times those worked out for me as well. Sometimes you just got to give it time. Or also, I don't recommend this for like new traders, but averaging down on your position. Now, this only works if you believe in the position. Now, averaging down, so let's say, for instance, what that means is, let's say I bought, let's go to Twitter here. Let's say I bought like $50 calls, and it dropped down to here. You can start layering in different calls and stuff like that. Obviously that wouldn't have worked here because this drop's just been vicious. But let's say I put a trade on in here, and I bought some Twitter calls for $40 strike, and it dropped more. I'd look to probably add a couple more, knowing that we found some level of support here. It seems fairly safe. So that's what I'd be looking at right there. It'd be like some $40 calls, and if it dropped down to the 30s, I'd probably add some more. And I always, when buying premium, I always do it for longer term. Now I am short Tesla as well on some of my other accounts. So I actually shorted it yesterday. I have a vertical call spread, and now that went against me. It went up to 323, but as you can look at the chart, things are not looking great here. We're having some strong rip ups. At the mornings we went from 318 to 327. Now I need it below me, but I'm down $30, but I have some time on it. So always give yourself time. Always have a strategy. Don't be concerned that you're in your account, you're losing money. You haven't cashed it out yet. Don't do anything in a panic. And that's really what I wanted to get across in this video. So if you have any questions, leave a comment below. Definitely, please hit that like button, hit the subscribe button if you're new here, and join our options trading group. Thanks a lot.